What's going on, guys? Welcome back to another pre-market live stream here with the Everyday Growth Advisors. I hope you are having a good day so far, and good morning or good evening to you. Just wanted to stop by and give you guys a quick market update here. So as per last week's live stream, we've broken out of the all-time highs. We were hoping that we would get a bit of consolidation here, but it looks like the market was a bit happy with itself. There are obviously a couple of things that I want to kind of shout out to you guys and make you aware. Obviously, I'm seeing all over FinTwit right now, and all over social media that this is the exact same conditions that the market was in prior to the 2008 financial crash, which there's a lot of fear mongering about. But remember that the economy is not in the same place as where we were. And we do not have the same Fed. So I think it's definitely not a wise way to compare apples to apples in two very distinct times during the past, 20 years and now. So having said that, the market's in a very different place, and I definitely think that there is more upside on this market in the medium term. As of right now, we have immediate targets up to 58.60, which is the 23.6 extension. And then we would get a 59.70 rally, which would lead to a second extension. With eventually, within the next 6 months, hopefully the S&P 500 hitting about 6,000. So that is to say that all of the fear mongering that is going on right now is only going to cause more FOMO the deeper we go further higher, okay? The more higher we go, the more people will be forced to close out their shorts, the more people will be squeezed, and the market will move higher successively. So be aware of that. And with the election year, which is just, 2 months away, I think it's really important to understand the dynamics of the market and the psychology of the market going forward. Now, just covering the macro basis so that I know that we covered everything. Remember that in January or in December, the market was going to almost price in a 9 rate cut scenario. And today, that number is much lower. In fact, just by the end of this year, the market's pricing in additional 2 rate cuts. And then by next year, they expect the interest rates to come down by about 1.5%. And that's quite a few rate cuts next year as well. So all in all, when you're discussing it from a broader perspective, this market has just started running. So do not waste out this opportunity. If you've been sitting on the sidelines with some cash and you've been waiting to invest it, wait for the pullback, accumulate on the dips for these businesses that are undervalued, and just keep going on your investment journey. Don't listen to the noise in the short run, right? So let's deep dive. One of the most important parts about today's live stream is the understanding that the NASDAQ is lagging behind the S&P 500. As you can see, very, very primarily, the NASDAQ has failed to break and failed to make new highs, which means that there is the biggest sector in the market which is lagging. And when this happens, we need to pay attention because there should be a reason why this is happening, right? And one of the reasons why this is happening is because the market is now pricing in a recession scenario, which means that stocks will be hit in the short run to come. Now, there was a bunch of things that happened in this past week, including the large quarterly expiry of options, which was close to $5 trillion worth of options. And now that that's all unclenched, we are looking for the 10-year yield to move a bit higher here into the 3.9 to 4% range before rejecting again and then falling lower again, because I think that in the short run, more people are going to flock towards safety with the impression that the market's going to underperform. Whether that truly happens is a different thing, but remember, it's not what the market is necessarily seeing as today. It might be the perception of the market in the future that you have to also take into account. On top of that, you have the dollar index, which is in a very, very important demand zone here. And the dollar has been looking weak for the past, I want to say, couple of weeks already, since the, I want to say, mid-July, we've seen the dollar on a downward descent. So the dollar getting cheaper is good for stocks. It allows better trade for US as well, because people will want to import more stuff from within America since the dollar is cheaper. Sorry, buy things from America when they export, right? Because the dollar is cheaper. It's cheaper to buy things. And that, as a function of the bond market as well, might send the dollar down further, right? So if the dollar gets further down, that's even better for stocks, but it's not necessarily that will happen in fashion, right? Bonds are typically inverse to stocks, right? Yes, they are typically inverse to stocks, but if you realize for the past multiple years, bonds have been moving kind of in tandem with stocks. So that trend is about to reverse in the near future. When will the trend reverse? If it's my guess, it will be when bonds finally hit, the yields finally hit about 3.3, 3.4%. That's when I see things maybe start to get uncorrelated a little bit, and then we go back to the uninverted yield curve situation. So keep an eye on that, and I'll give you more updates in the future. In terms of the VIX, volatility has been absolutely crushed the past couple of sessions. Almost 2 weeks now, volatility has been down. That's a good thing for stocks to go further higher. Not that volatility can spike again. And all in all, there are 3 sectors that you should be watching: consumer discretionary, energy, and at the same time, you should be watching real estate. Okay. These are the 3 sectors which I see opportunities in. Consumer discretionary for further breakout and further retest of the highs at 212. And then also real estate for a potential short position if it rejects and confirms. And energy for a potential bullish bounce position should it break out and give us further confirmation. These are the 3 sectors that I would pay attention personally right now because they yield the best opportunities. But of course, there are others as well. So let's go through all of the top 5 opportunities. Let's go through all of the top 5 opportunities that we can trade for this week. And I put them all in the snippets for you on Discord. If you don't have access to it, make sure you tap on that link, which is in the description in our bio, and join the Discord. It's absolutely free to be there, and you get these top 5 picks every single week. So I wouldn't see a reason why you wouldn't want that, right? So let's get into it. So the first one that I want to talk about is going to be Johnson & Johnson. This is a healthcare play, and healthcare is a inverse mover towards the market. So it typically is one of those that moves as a hedge most of the time to the market, because even when the economy is doing bad, people still need healthcare. So healthcare, I'll be looking at a potential bounce only because it's been building a base above. Now, healthcare you can pretty much play healthcare with the proxy through J&J, which is Johnson & Johnson. And you can see from the chart that it's bounced above a previous high here, and now it's forming a base here for a potential further upside. If we can get a decent bounce off the 163, then I'll be happy to take a long position to play as a swing trade into 170, 175, somewhere around here. And that would be a nice move in the short to medium term to capitalize on this. So if the market moves further down, then I'll be taking advantage of J&J. The second is CRM. This is Salesforce. And this is in the packaged software category. So it still falls under IT or Infotech. Nice moves up, squeezing. And the only terrible thing about this is that it has an awkward liquidity grab at around $272. Now, this is not ideal spot to get in, but if it can bounce strongly above the 267, 268 level, I might be happy to take a position in this in the short run as well for a potential swing trade to the upside. If it rejects and doesn't get through here, then a short position would be best. Played below around 263 or so, but it has to show momentum. So both ways, I think this is a great, excellent play, and I think you should keep an eye on it this week. Next is Shopify. Very similar setup than CRM. With Shopify here, you have a very similar thing where previous price action has been capped here, has been giving you lots of resistance, and now all of a sudden you see a breakout, and if we see a base continue to be created here, then we could see this thing pop up to around $88, $90, right? So this is another one that I'll be looking at. Now, these two names are specifically in the growth category, I would say. CRM maybe not so much because it's now part of the Dow Jones, but Shopify totally is, right? And these names would benefit from the interest rate environments that we're about to embark on, okay? Next is going to be Amazon. Very similar setup to Shopify that you just saw. Overhang resistance at 200, which was the previous level at which Bezos was selling his shares. You guys remember Amazon kept tapping up here and couldn't break through because Bezos was selling all his unloaded shares. So now that we have the potential to retest this level, buyers might come back with the vengeance and we may finally break it. If we don't, then we'll get a double top scenario, and that can be further downward bet. So I'll be watching this one closely as well. And then, of course, Tesla, our darling Tesla, right? So darling Tesla, last week we played it on Discord. I obviously put it as one of the top watches for the week. We managed to close pretty decent profits on this one. We had an entry right after the breakout bounce, and then we had a pretty quick move. All my entry was in the yellow little arrow right here. And then my first exit was when it started consolidating. Second exit was up here. And then it just kind of ranged for a little while, and it sold off by the end of the day. So today it's up pre-market again. The plan here is to wait for a potential bounce correction at 236, 237 again. And if we get a double take back down there, I'm happy to take some upside there. If we get a breakdown below 236 and then we start rejecting 236, well, then, I might be inclined more to take a downside position there. But either or, I have runners running from the first position, so I don't really mind. If Tesla breaks above 244, 245, I will not be chasing this trade to the upside. Just understand that when you chase a trade, you're going to be overpaying for contracts, and that gets you priced out. So the moment that you find yourself doing that, take a step back and revisit your rules, revisit your engagement, so that you understand that you're, overstepping your boundaries or whatnot. And that's, most of the setups that I have for you guys. So if you have any questions or, comments, please leave them in the chat right now. And yeah. I'll take any questions, comments, any other ticker breakdowns. There are a whole other bunch of setups here, by the way, that obviously I share with the private Discord community. So feel free to ask about them as well. And, if you need any help with your setup, you can post it right now and we'll get it done for you. No ticker requests? Does no one have any ticker requests? Alrighty then. Alrighty then. Well, I appreciate you guys tuning in for today's live. I will see y'all back on Wednesday for the next one. Oh, wait, actually, Wednesday I won't be holding a live. I will not be holding a live on Wednesday. I'll try to record some content and put it out there for you guys so that you have something for Wednesday. If something, massive happens, But I'll be traveling from Wednesday to Monday for a business opportunity. So I'll try to put out content, recorded content, so that you guys can just kind of, go over that. But I'll see you guys back on the next one. And I sent out the newsletter, so have a good read on that. But we'll see you in the next stream. Have a good one. Take care. Peace.